Hi, Peter Jones, author, property investor, ex-chartered surveyor, and in this series of videos I'm thinking about lessons from 2008 with a slight pivot from this video onwards, because we're going to think about things which I learned in 2008 which have been very much reinforced in 2020 and probably with a more of a business and property twist than the previous videos. And one of the big lessons which I learned in 2008 and which has been reaffirmed in 2020 is the requirement of having available cash. Now, cash isn't always going to save you from every situation, but in a business sense and in a property sense, if you have cash available when the bad times hit, you're probably, depending upon what's happening, going to be more likely to be able to continue trading and trading through the bad times. And I remember I was listening to Rob Moore, the co-founder of Progressive Property, who was talking about this, who was recommending that in his experience that one should probably have something like a year's worth of cash tucked away just in case, sort of rainy day money. Now, I realise that for many of us that's quite a big ask. Most people apparently are only one paycheck away from bankruptcy. So it's imperative, I think, no matter what you're doing, no matter what business you're in, whether you're self-employed or whether you work for somebody else, that you have that rainy day money set aside. And again, I realise it's a big ask for many of us if we're basically living to our means, if our paycheck really only covers our costs, or even maybe it doesn't even cover our costs, and maybe month by month we go into debt. Well, if that is the case, then obviously that's an issue to address anyway. But assuming that you may have some kind of a surplus, and if you've already started in property, hopefully you've got cash flow already coming from your properties, think about how much you can save. Now, saving up a year's worth of cash probably isn't realistic for most people at the beginning, and it's going to take time to build that level of cash anyway. But perhaps you can start by just saving a month's worth of cash, and then maybe 2 months, and build up to 3 months. And that will make a big difference, not just in terms of what could happen and how you can keep trading, but also psychologically, just the relief of knowing you've got the security there should anything happen. Now, of course, there's discipline required for this, because you need to stop spending as much maybe, or you need to earn more, or maybe a combination of the two. And it'd be a good idea probably to sit down and plan how you can actually do this and how long it would actually take, say, to save up 3 months' money. Now, is that 3 months of personal cash, or is that 3 months of cash for the business? And the answer is yes. So I'd probably start with 3 months of personal cash, so that if anything happened, you know that you can support yourself for at least 3 months, and then build it to a point where you know that if anything happened, you could cover the business for 3 months. When you've got to, and I don't know how long that will take, by the way, that might take you 6 months, it might take you a year, it might take you 2 years, I just don't know. But whatever it is, it's worth doing. And when you get to 3 months, then it'd be worth getting to 6 months. And then if you can eventually take Rob's advice and get to a year, then that would be great as well. But of course, one of the things which I'm very aware of is that if you have a lot of money tied up, then there's the opportunity cost of using that money. And that's a big dilemma which I think we have as entrepreneurs and as property investors. If you had a year's worth of money, enough to cover all of your personal costs and enough to cover all the costs of the business for a year, that's a lot of money to be tied up. Would it not be better to invest that and actually get more income from it? Well, again, you know, we can go around in circles on this, because I would say, yes, that's probably a good idea as well. But the reality is somewhere in between the two. There's usually a balance, and it's probably something like this. When you've got your 3 months or your 6 months, or hopefully ideally at some point in the future, however long off that is, your year's worth of money, then I would suggest that you do invest it, but you invest it in something which is very liquid so that you can access it. Or if it's a year's worth of money, maybe you have 3 months very liquid, as in cash, then maybe you have another 3 months worth, which is perhaps in something which is giving a slightly higher return, but is still relatively liquid, but not as liquid as ready cash. And maybe the other 6 months is something in something which gives an even higher return again, and is even less liquid, but you could get it on 6 months' notice, for example. So there would be ways to actually use it and to make sure that it's still earning. Otherwise, that's a waste, but still be there available for when you need it. So big lesson from 2008 and reinforced by 2020, because at the moment we don't know where we're going with this. We don't know how long we're going to be in lockdown. We don't know what the economy is going to be like when we come out of lockdown. Having cash set aside just in case makes a massive, massive difference. For us as property investors, for example, one of the problems which we're possibly facing at the moment is tenants not able to pay rent. Well, if tenants can't pay rent, you might be tempted to go for a mortgage holiday. But the reality is that the mortgage holiday, although it's not going to affect your credit score, I've already seen on Facebook that brokers are suggesting that lenders may look at you and think, well, if you needed to have a mortgage holiday 2 or 3 or 6 months ago, we can't lend to you now because you're not a good risk. So we need to take all this into account. If you've got the cash behind you, then you wouldn't have to worry about that or participate in anything like that. So anyway, just throwing it out there as an idea. Having cash cash is king. If you've got cash, you can survive most things, not everything. Unfortunately, because of the current crisis, it's more of a health crisis than a financial crisis. But in terms of your business, in terms of paying your bills, in terms of keeping yourself supported and your family supported, having cash is absolutely crucial. Until next time, please stay safe and healthy.